Hello ladies and gentlemen, welcome to our morning outlook. I'm Joseph Novich, Senior Analyst at GDM. First we're going to start with the Asian markets. The yen retreated from the strongest level in 4 weeks against the dollar, of course, before the Federal Reserve ends a two-day policy meeting today. Japan's currency fell versus 12 of its 16 major counterparts. A gauge of the USD rose on speculations Fed policymakers will remove their pledge to keep borrowing costs for as long as it's needed, I quote, for a considerable period. In their statement after today's meeting, we will find that out. Looking towards the FOMC, it's creating a bit of a cross-current. We think the market may be more reluctant to sell the dollar-yen now than it may have been yesterday. Slightly moving to New Zealand, the Kiwi over there dropped the most in more than a week after the report showed the current account deficit widened. Statistics New Zealand said the current account deficit expanded to 5 billion New Zealand dollars. It's approximately 3.87 billion US dollars in the third quarter, the widest since 2009, and compared with 1 billion in the previous 3 months. The Kiwi fell 0.8% to 77.33 US cents, the biggest decline since December 5. The Aussie weakened also 0.8% to 81.57 US cents after dropping 81.40, the lowest since June 2010. The pound weakened versus the USD before the Bank of England publishes minutes of its most recent policy meeting, with of course traders awaiting signals on the institution's outlook for interest rates as the inflation is slowing. The GBP dropped 0.1% to 1.5734 US dollars as of this morning after climbing 0.7% yesterday. That's the biggest advance since October 15. In Europe, the stocks index futures declined as oil is trading near 5-year low, indicating equities will resume losses. After, of course, we saw the stocks Europe 600 index snap a 6-day losing streak yesterday. The euro area reports inflation today after weaker than estimated purchasing manager indices in Germany and France. And of course, warning from Bank of England Governor Mark Carney that a global slowdown threatens financial stability. At the moment, the euro is quite steady below the $1.25 level. Moving to commodities, before we take a close eye on the economic calendar events today, gold is holding an advance before the Federal Reserve concludes a two-day policy meeting, as investors, of course, are assessing timing of U.S. interest rates increase, slumping energy prices, and potential Russian bullion sales. Gold for February delivery gained 0.3% to 1197.70 an ounce on COMEX in New York. After, of course, 5th day of losses, that was the longest losing run since November 6. Assets in the SPDR Gold Trust, the largest exchange-traded product backed by the bullion, contracted for second day yesterday. Oil West Texas Intermediate for January delivery dropped as much as $1.32 to $54.61 a barrel in electronic trading. Oil in New York traded near a 5-year low as, of course, Russia said will keep crude production steady next year. The U.S. crude inventories expanded by 1.9 million barrels last week, the American Petroleum Institute in Washington reported yesterday. Stockpiles probably shrank by 2.25 million barrels. A report is due today. In the calendar, as we mentioned, very important data coming out from UK interest rate decision in about an hour time. Also for UK climate account change, average earnings, of course, unemployment rate, all of that at 9:30 GMT. Now let's take a look at US at 12 GMT, MBA, mortgage applications, 13:30 GMT, consumer price index, and for the most important at 7 p.m. GMT, Fed interest rate decision and monetary policy statement. Keep an eye on the calendar. Today could be a historical day. Thanks a lot for being with us. Bye-bye.